All right, thanks a lot. My name's Wauters. I'll be moderating the VC panel. Every conference has to have an investor panel, and I got stuck with it, which is great. It's amazing. So we don't have a lot of time. I know we're in between us and the lunch, so we're going to do a quick round of introductions. What's your name? Which firm do you work for? And how big is your dick? I mean, fund. Sorry, how big is your fund? Fund.
Okay.
Go.
My name is Pavel, Almaz Capital, several $100 million.
I'm Pavel. I'm a bit smaller. 40 million is the last fund. There might be an announcement coming up soon about something new, but
There might be an announcement.
40 million is what we do. We run it out of Berlin. We invest all around Europe and in some cases also outside of Europe.
Great.
Dan Lupu, Earlybird, our C and Turkey dedicated fund is about $150 million. We are pretty active already, invested in six companies, 3 more coming online. We already have investments in Bulgaria and Romania.
Hi, Cedric Kutlu from Fools Fund, previously with Kibo Ventures, was seed early stage. No vertical or geographical limitation from our side.
Yep, and thank you, Cedric, also for joining the panel. And it's great to see so many women on stage as well.
Thank you.
Moving on, we're going to talk, the title of this session is VC Trends in Europe. Obviously, I'm not a VC, so I don't know what the trends are. I'm just an observer, so I'm going to ask you what the trends are. But I have a theory, and one of my theories is that it's getting so easy as a startup at this point to raise seed funding through crowdfunding, angel investors, angelists, accelerators, incubators, whatnot, that all of the major VCs, you included, are kind of moving away from seed and early stage and moving up Series A, Series B. And I know Pavel disagrees with me on that.
Absolutely.
So I'm going to start with you.
Okay, so I don't agree with that, as you said. So I think it's probably easy, and that's largely due to kind of state-backed programs in different countries in around Europe to raise like the very first money, like 100K, 200K, like Launch Hub in Bulgaria. I think it's 200K checks. They cannot do more. So that I agree has become much, much easier over the last few years. However, doing like $500,000 or $1 million, which is a large seed round or a very small A round, is nowhere close to easy, I think. And we explicitly focus exactly on this stage. So, you know, we want to back guys who maybe have been through an accelerator, have some friends and family money, really small seed or pre-seed round, and we will fill the gap. There are some guys who, you know, will write a few $1 million check, but they also want to see much more. And I think there's this space between like the seed, the super early seed, and the proper Series A that is not really well addressed. And in general, I think in Europe is totally underfinanced in tech all across the stages. So it starts from the early, goes all the way through like growth rounds. And actually, to the contrary of what you said, I think actually the later stage you go, the more mobile the capital becomes. And the easier it actually becomes if you're a good company. So like the best example to illustrate that is the increased activity of US investors in Europe, and they don't go below the B stage, right? So like Union Square Ventures, Kleiner Perkins, Sequoia, they all have investments in Berlin, but the earliest they ever done was a B round. So I actually would say if you are a later stage startup, you have access to global capital markets. At the earlier stages, you have to work with more local investors,
Understood.
and these are not really kind of, you know, plentiful.
Cedric, same question, because you've been on the seed investment side as well.
Um,
I should probably also disclose that these are all very smart people, but one's really smart, and that's Cedric, because he invested in TECH.EU. Should probably disclose that somehow. Go.
So yeah, I think I agree also with Earl. I think there's still some very interesting activity at the seed stage, but if it's done in a disciplined manner, a lot of angels I think are going to get burned because they get easily seduced by these very passionate entrepreneurs. But there's not that many disciplined seed funds that are going to do a small check, earmark a larger portion for follow-on also, so that they lose on their small checks and really gain more upside on the winners. And although I think it's cheaper and easier to launch a company today, it is more expensive and more complicated and much harder to build a sustainable company. So there needs to be capacity also, I think, from the bottom of the investors to keep on accompanying the journey with value-add investors like some of the funds that we find in Europe.
Got it. And just to deliver some context backed up by data, I think the EVCA, so the European Venture Capitalists Association, just released a report that said that private equity investments, which includes VC, in 2014 went up 14% to 41 billion. Last quarter, Dow Jones said there has been a record of VC investments in Europe, and the last time they hit that number was in the third quarter of 2001. So the data would show that there's a lot of momentum in Europe.
I agree. Yeah. There is.
But does it also make it harder for you to find the right companies? Because Europe is very fragmented, it's very big,
I mean, like,
and
by
there's increased
international-
competition. So
By US standards, it's still a desert, right? So I
maybe,
think,
maybe we should get
you know?
Dan to answer the question
Yeah.
just to mix it up a little bit.
I think the trend, if you want, is that it's a convergence between company creation at the moment and the increased availability of early stage funding. I wouldn't say that we are crowded out by the smaller funds or funds that are focused on seed and early stage. I would just say that we are naturally moving towards companies that have more proof points, because obviously we like to invest in companies that make it big. The later we get into the picture, the more chances we have to get there. But we are stage agnostic. If we like a deal at the seed stage, we can do seed stage as well. But it's interesting that the quality of the companies is increasing. This is I think the fundamental trend, and I agree with Pavel that regardless of the emergence of new early stage investors, there is a significant lack of capital, and that's why we are actively trying to get more people into the region to co-invest with us. And this might be counterintuitive because we welcome competition to the region. We see a lot of deal flow that is not being valued the way it should be, and also because we make the judgment that it's going to be tough to fund a company that needs 15 million, 20 million, even with a $150 million fund.
But very concretely, is the increase in these small seed funds, incubators, accelerators, actually making the quality of the entrepreneurs at the seed stage higher and better to invest in?
may I?
Or does it really matter? You can, of course.
I think it does, because the more critical mass you have, the more the absolute number of really good stuff kind of get, right?
So you would also argue that there are more than enough, well, not enough accelerators. There should be more seed funds and accelerators.
I mean, there are actually very many accelerators. That's probably the most competitive stage of the kind of tech financing landscape in Europe. So I don't know how many are there, but I think in general it's a good thing that they are there.
Right.
And if you increase the number of people who pursue entrepreneurship as a career path, the better it is for like the whole ecosystem, right?
Cedric, do you want to
No,
weigh in?
just on the accelerator side, I think there is a huge proliferation of accelerators. Within that boom, what's interesting is you see very specialized accelerators. So some, for example, in Berlin, focus only on finding solutions for the blind. One focus only on gaming, on big data, etc. So out of the whole herd, there should be probably more quality accelerators
Right.
and less wannabe accelerators that are it used to be hot to be in a rock band, now it's hot to be in a startup. So
Yeah.
everybody's trying to cater to that, but doing it
That
the
makes
right
sense.
way, there's not that many.
There is one caveat to that. It's great to have more capital because you get more companies funded. The problem is that a lot of early stage companies imagine that they can only make it if they go through the full cycle. They get seed funding, they get angel funding, they get through an accelerator and so on, which is not the case. I think the best companies that we've seen are not part of this cycle. They are bootstrapped, they are not participating in conferences, they are unknown to the general public, and these are the ones that we are going after.
But they don't need you.
No, actually they do. There's a bit of education required to that, so a deal will take a year and a half,
Yeah.
but still you get through the message. And I think in some cases it's even corrosive to the companies themselves to spend time spend 3 months to raise 100,000 instead of concentrating on the product.
Sure. Pavel,
Yep.
Almaz Capital has a slightly different model from these guys. you very much differentiate by building bridges with the US. That's why you were founded in the first place. So can you briefly elaborate on your model as VC?
So we were launched in 2008, and the first fund was focused on the former Soviet republics, and the idea was to take really good globally competitive technologies out of there and take them global. And for that purpose, we have 2 offices working as one firm, and we do deals jointly. We have 5 guys in the US, 6 guys in Moscow right now, and we have been looking more to east out of the former Soviet Union. We have done deals in the Baltic states and in the Czech Republic. They're looking to do more deals here. And we really like to think that we are quite different from a lot of other guys in the region. We are very similar to many Israeli VCs that do the same thing in Israel, but in the region, few guys really few US firms really operate at the stage where we operate, like early stage. People come later at the B stage or C stage. So the main premise is that domestic markets are small in many countries in Europe. Even in Germany, UK, and France, there are not that many verticals where you can build a multi-billion-dollar company focused just on that market. And US is the big gorilla in IT. 40% of global IT spend is in the US. And if you take most verticals, and the potential size of Bulgarian company would be 10 million revenue, in the US it will be $1 billion or $10 billion revenue company. So that's very simple proposition. Okay, if you really want to have a large exit, a large company, you should go to the largest market out there. So that's it.
So you're starting to invest in this region, you said?
Yep.
I'm assuming because you're on this panel and actually you have the conference that goes for all of you. But is there any particular market or country that you're really more than interested in?
Well, for us, the whole region is interesting. I think
you can say Bulgaria if you want to.
Well, we're interested in Bulgaria as well. I think we're looking at the markets that are less served with venture capital. If you look at Europe, clearly like UK, France, Germany, Finland, they have a lot of capital. Romania, Bulgaria, Slovenia have much less venture capital working with the local entrepreneurs. So that's, I think, we would try to go to places where we see that people are underserved with capital.
Right.
So, yeah, I can also chime in on the early discussion of the early stage.
Sure.
I think the trend of the recent years was a shift of capital interest from B2C to B2B companies. And for B2C company to build a prototype of the web service or a mobile app really costs very little capital. So at that stage, really, if you already have a prototype, a round, basically, capital you need to try a business model, try to sell it, was small. So you could have like 300,000 euros to really try your prototype. Now, when the interest is on more hardcore sort of B2B software, just building a prototype requires more capital. So there's angel money goes into that. There's more capital, and just and to try to build a business, it also requires more capital. So
you have the opposite view than him. He says you don't need the money. You say that you do need the money.
No, well, I think everybody needs the money. Come on.
I mean, if you need the money, get the money. But if you can make it without the money, don't waste time just because it's a fad to
I agree. I
raise.
think we have the same position, frankly.
And if you don't need the money, that's the best time to raise money.
No, but I mean, even people that don't need the money are going through the motions of going through accelerators, seed funding, angel networks, and so on, because that's what everybody does.
Sure.
And I think they are wasting their time.
Right. So for the people in the room that might not know the basics of VCs, what VCs, they go out and raise money from their own investors, they invest in companies, and the goal is actually to return that money, and preferably more than that money. So they're not a charity or anything.
The goal is to return much more.
Much more, multiples. So we're going to talk about exits a little. So about 4 weeks ago, we released a report, TECH.EU, where we analyzed all the exits in tech that we saw in Europe in 2014. And there are some aspects of what we found that was very interesting that I would like to discuss with you. One of them was that out of the 332 acquisitions that we tracked in 2014, 122 was a US company buying a European company. The number 2 was Germany with 40 deals. So that's 3 times as many deals So is that a good thing that the US companies are typically the acquirers of European companies? Or do we want to change that?
Does it matter?
I think that's
don't know, does it matter?
That's the nature of things. Look, like, I don't know, Microsoft, IBM, all those guys, they have like gazillions of money on their balance sheets, and they grow through acquisitions, and they are, like, most of the money that is out there to buy tech companies sits in the US.
I think
That's
it's,
just what it is. Yeah, I
Right.
think you cannot change that or try to change that.
it's a
I
testament.
think what you can try to change, though, is to raise the ambition bars of European founders, and I think that's happening a lot, that they don't try to sell out, that they kind of build sustainable companies, IPO or whatever, and then at some point in 10, 20 years, they will be acquiring. So, and we see that happening, you know, Rocket Internet, Zalando, Winden, Criteo, and Just Eat, you know, those things are happening more and more, and that's a very cool thing. Huh?
And it's
Sure.
and it's probably a line also that U.S. investors are. The bridge between the U.S. and other parts of the world is getting shorter and shorter. So you have U.S. investors also getting into deals outside of the U.S., which perhaps didn't occur as much 5 to 10 years. So by default, they bring in also the whole network that and the stakeholders based in the U.S. with them. So I think we're probably going to see this more and more happen on one side. On the other side, also, I think there is sadly a fiscal advantage also of these heavy cash U.S. Companies that they need to invest at some point some of the cash in non-U.S. assets as well. So I think that's probably driving some sort of decision making also from their end.
Dan, you asked the question, does it matter? So I assume you think it doesn't matter.
I don't think it matters. You heard the numbers from Pavel earlier. You sell to whoever gives you a better return, and that's normal. And you want to be part of a bigger picture. The founders themselves want to have the success that comes from being acquired by a larger company, being part of a larger ecosystem. So it's natural, I think, that I don't think that it matters whether you are acquired by a US company or a German company or a Spanish company. It all matters, the return and the fit, because in the end we get out, but the founders most
I mean,
most
it
of the time
matters
stay in.
from the point of view of the ecosystem, right?
Yeah, I'm not arguing either way, but that's true.
Right.
If the money and the people don't stay in Europe, then that money doesn't get reinvested for the next generation of entrepreneurs. It doesn't necessarily help build the ecosystem if they
No,
actually
but people
do
Actually,
stay
I
and
think
the money
it
stays.
does a
Yeah.
critical function of building the ecosystem, because exits like Telerik, like Yemek, like Avangate in Romania, all these are showing people that it's possible to build large companies and have decent exits out of the region. The same way the best PR for a VC is to do the deals instead of participate in panels. It's the same with the ecosystem.
Then why you're in here? Should be
Because we
making
do
deals.
because we do the deals also.
Got it.
The same way it's when you see the large exit happening from your market, which is critical.
So
Yeah,
another thing.
and just to
Go.
quickly to jump what you said, I'm not sure I agree with the fact that even if you're acquired or if the exit occurs from a company that's outside of your national continent or the European continent, I think by default you still re-inject those wins within your.
Obviously,
within-
some
within-
effect is there, right? But
Yeah.
the question is...
Well, I wasn't arguing either way. I was just playing devil's advocate. Because I've sat in meetings with the European Commission many, many years ago when they were kind of thinking about how can we stimulate this European entrepreneurship. And one of the things that came up was, we want exits to stay in Europe, which I thought was pretty stupid.
Yeah.
Because
Yep.
Yeah,
you know,
you're limiting your options.
you
so,
can't
yeah.
control the market or steer the market that way anyway, so why make an effort there? But
You
the
want to
other
have
thing,
exits, basically. You want to have as many exits as possible.
so, but the other thing that, you want more exits, not necessarily, it doesn't really matter where they go. But the other thing that was apparently in those meetings that there was a perception that there's a lack of capital in Europe, which as soon as you dig into the data is actually not the case. There is a whole shitload of money available in Europe to invest, but it usually goes to seed stage up to maybe Series B. As soon as you hit Series C, real growth capital, real deals, $50 million, $100 million rounds, those were typically coming from US and increasingly Asian investors coming to Europe
Correct.
and doing these deals because they can. But is that should there be more big European investment firms that do these deals rather than US?
It should be more of everything, but obviously there are no good investors in Europe, or not many, who can write a $50 million check. So that's a big opportunity for US guys who know this business, and that's...
Right.
you know.
But my question is more, should we unlock where the
But,
money actually is? The family offices, the PE firms that don't necessarily invest in technology today, should we be trying to stimulate those to pump more
But I
capital
think,
into the
I think the exits, the successes will unlock the money themselves. It's not a matter of policy because you cannot direct people to invest into things that, I mean, you can do it with public money and take a view that you need this to do development of the ecosystem or the markets or whatever, but you cannot direct family offices to invest. But when they are going to see that it's possible to have a $500 million exit or $1 billion exit from the region that is financed locally, then they are going to start paying attention. That's the natural way of.
So you're
of
saying
doing
just go out and do it, and the money
Yeah.
will follow.
But there is a lag, like you say, I think, in growth capital. But I think that's aligned with the market conditions. Europe is much more segmented and fragmented when you compare it to the US or Asia. So by default, we're seeing much more volume, but in much smaller checks compared to if we look at 100 million plus checks, the North America and Asia are way, way, way ahead compared to Europe. And it's probably going to stay that way for a bit because there is not that level of institutional funding also at the growth stage on this side.
Speaking of VC trends in Europe, one topic that always comes up when I have conversation with VCs is that it used to be relatively easy to stay in your market and invest from London or Berlin or anyway. But increasingly, you have to go out and actually travel and get to the markets and go on the ground in countries like Bulgaria, but all over Central Eastern Europe. If you ignore the Nordics, then you're going to miss out on a lot of deals. So that takes, that kind of ups the game a little because you need to have the team, the back office, the bandwidth to do all this traveling and then deal flow generation. So do you think that competition is between VCs in Europe is going to increase in that level?
That's great because it happens because the market got more competitive. And why? Because they got early on successes which attracted more money, which hopefully is going to happen here. And they are going out of London because the market is crowded and they see less competition in the region. And we welcome them here. We welcome them. We welcome in the deal. We actually proactively try to engage people in our projects.
Pavel, do you have any thoughts on that? Just Pavel.
I think you have to be on the ground to really be successful. And we don't have anybody in Bulgaria right now. So I'm traveling, my colleagues are traveling, but as soon as we get like 3-4 deals in the region, I think we'll definitely have somebody on the ground. I think you get dramatically more and better deals if you're networked locally than if you just.
But I mean, you can't have someone on the ground in Romania and Bulgaria and Slovenia, and that's not really possible, right?
Yeah.
I mean, that's the tricky thing about Europe, right? I think you cannot build your strategy around one country or two countries. I think, at least that's what we believe, that you need to play Europe as a whole.
Mm-hmm.
And then the question is how you do that. And probably no one has the answer. The guys in London say you sit in London, you fly around. We say you sit in Berlin and you fly around because it's closer, You don't know. But definitely I think the times are over where you can say, I'm going to invest in the best German tech companies. That's not something.
And probably travel time. 1-2 hours of travel does. Yeah, as far as you want to go.
And I know that Kieran from Earlybird always argues that it takes almost less time to go from Berlin to London and back than it is to go from Mountain View and drive the 101 up to San Francisco. So people perceive Silicon Valley as this small place, but it's actually quite widespread, and they also have to deal with travel, time, the traffic, etc.
That's not correct.
Yeah.
No,
No?
it's much faster to get from Mountain View to
Well,
San
it depends
Francisco.
on the time of day, I guess. But going back to our exits report, one other finding that we had was most of the exits that happened in 2014, and I forget the percentage, but it was about 65%, were non-VC-backed companies. So most of the companies that had an acquisition or an IPO or a merger were companies that weren't backed by venture capital. Does that statistic surprise you at all?
No, I mean, the best companies are like the best business models. Like there are companies that are profitable from the start or just self-finance or whatever. Not every startup needs VC money. You need VC money when you have to lose money for a longer period of time.
And venture
believe
capital
there are
is
many
still
points
very
for that.
young also, I think, in Europe.
Yeah.
When you compare these numbers to the US, this is, if we will look at these numbers now, starting with the new cycle that's starting, and at the exits for the next upcoming years, I'm sure these numbers are going to be
Do
highly
you think the
much
ratio is
increased.
going to change?
Yeah, absolutely, yeah.
Okay.
Yeah. There are much more VC-backed younger companies today than there was 5 years ago at the beginning
Yeah.
of the cycle, which is
And there are also
probably
more
related to
VCs.
that report. Yeah, correct.
And lots of these small seed funds popping up. I want to open up the floor a little bit to questions from the audience, if you have any. Oh, wow, that was quick. Do you have a mic? And please introduce yourself before you ask the question. Thanks. Hi.
Hello. Hi, my name is George, and I work for a VC company. We have a fund that we invest, but my question is basically to the whole panel, and if you bear with me, there is a little bit of a background that I wanted to discuss with you. There is a Yale School of Management professor called Paul Bracken that says that the Pentagon in the United States actually provided the early impetus for the creation of the Silicon Valley. And at the moment, the military spending in the United States creates another corridor in Northern Virginia of technology companies. So my question is this: isn't the European model getting it wrong in the sense that they pour the funds, they want exits, but nobody buys the technology at the end? Nobody creates the incentive for the creation of the technology from the consumer side. So my question is, do you think the Europeans can do better by providing funding and incentives for companies to demand new products from technology companies rather than try to get it from the back end, saying, you know, here is a VC fund, invest, exit, invest again, etc.
Okay. Great question. Who wants to tackle that one?
I think it's like, yeah. You know?
No, that's just a quick comment on that. I think it's true that historically speaking, for defense and military reason, that was really the source of the upbeat of Silicon Valley. But then this was already happening even before in Detroit with the automobile companies. Now, Silicon Valley is very unique in its way, and I think we're never going to be successful at reproducing it in any other parts of the world. There's been many attempts of putting academia, venture capital together, the industry, corporates, etc., and then hope for the magic to happen, but it really never didn't. But on the other side, I think we are really living historical times, and there's exciting stuff going on in any parts of the world. So for this to come to birth, venture capital, I think, is a key part of the equation, and the more funding at any stage, I think, is extremely positive. So I don't think we are doing anything particularly wrong in Europe. What would be wrong is trying to be obsessed by trying to replicate the Silicon Valley model, which is a recipe for disaster, in my opinion.
And I think at the moment there are so many markets, so many different sectors that are ripe for disruption, and that's obvious that you don't need an artificial demand creation for technology. You can just look at the markets, and as long as you understand them and figure out how to do it, you can still come up with the technology yourself.
Yeah. And just to throw another statistic out there, Atomico, the investment firm, put out some research last year where they analyzed all the unicorns, which is a stupid term. It's essentially a software company that's valued above $1 billion. So they did research going back 10 years and looked at where they came from. And increasingly, the number is coming, well, the new ones are coming from other parts of the world. So at this point, 60% of the unicorns are not from Silicon Valley. They're from places like China or other parts of the US or Europe. Europe, very little, 16% so far. But getting there, and the gap is widening as well. You see more of these big companies coming from other parts of the world than ever before.
One comment on your question. I think it's like what you suggest is that we're building here like some toys and technologies that no one wants to buy, but in the end it's about building businesses that are based on technology, and you don't need to have demand for businesses to create a good business, right? That's, I think we don't back toys, we back small companies, right, in the end.
Any other questions? Just raise your hand. There you go.
My name's
Hi.
My name's Eric Halsey. I work for a company called Hop
A
Online.
little closer to your...
No, okay, someone turned it on, thank you. Yeah, my name's Eric Halsey. I work for a content marketing company here called Hop Online. I'm ironically from Northern Virginia. I grew up in that area, and I could also get to speak if anyone wants to know what it's like on the ground there, this crazy explosion of tech companies. But my question was kind of living here for several years and getting an idea of this Bulgarian kind of ethos, this what I would call maybe innate pessimism, where I would say Americans tend to be optimistic when they have reasons to be pessimistic, and it's quite the opposite here in Bulgaria. I'm curious, how does that trickle up to someone on your level, someone who's looking to invest in Bulgaria or somewhere in the region? How does, whether talking to people on the ground, whether looking at surveys about consumer confidence and things, how does just people's perception of things relative to maybe economic realities, how do those two things jive?
Wanna tackle that one?
Okay. Well, inside Almaz, we actually sometimes think of the Soviet yoke that really impacted the societies in the region in a way that the optimism is down and the entrepreneurship is a bit less common than in the US. We have very good technical guys in the region who can do very sophisticated technology, but people are looking at the worst case scenario, not focus on the best case scenario. And actually for us, that's another reason why we operate as a bridge, because if we combine great tech people from the region with the great marketing and sales guys in the US, that's a winning combination, we think.
Okay, maybe time for one last question if we have one.
Yeah, guys.
There you go. Can we get
Hello?
them? Oh, sorry, there was someone else. Sorry.
Hello, guys. My name is Jordan. I work for Navic. I have 3 buckets of questions, very fast, very to the point.
Go.
What are the 3 most common mistakes that you have encountered with entrepreneurs in your portfolio companies? What are the 3 features that you look for in a project before you invest? And if you want to give one advice to an entrepreneur, what this advice is going to be? Thanks.
And just to interrupt real quick, every VC wants to invest in a great team, has to make
Great
a great product in a big market. So don't say that. Say something
So
concrete.
we are very specific, so we invest in online software, also known as SaaS, and digital marketplaces, kind of eBay style or whatever, like where you have demand and supply meet each other. And these are like the 2 key areas of what we invest in and what we look for.
Okay, but when an entrepreneur comes to you, what are the 3 things you look at before you start?
No,
before you
but his
decide
question was
who-
3 mistakes, no? He wants like...
3
yeah.
mistakes? That's even a better question, actually.
Yeah.
What are some of the 3 mistakes?
No, I think every entrepreneur underestimates the operational complexity of building a larger company than his current team, like a really successful company. That's the biggest mistake that we've seen.
It's hard to make those general.
We're going to wrap up
absolute
because we're
statements.
If you want, I'll just
getting a signal.
super quick, because I think it is a very interesting question. Just my 2 cents on that. I think on the fundraising side, a mistake that I've come across probably too many times is the founder does not understand the importance of fundraising, and he would delegate that to either a boutique, a broker, etc. And I think that's for me, that's a huge turnoff. If one of the founders or the CEO is not the responsible for fundraising and he subcontracts that to a broker, for me that's already a no-go on one side. Yeah, absolutely a deal breaker. And then
That's a good one,
and then also on the recruiting side, I think sometimes a bit too concerned. Like I think we should be, as a founder, they should be quite ambitious in terms of who they want to be surrounded by themselves. And even if it takes a bit more time or they have to dilute a bit more equity on the stock option, I think surrounding yourself really with champions, whether it's on the product side, on the sales and distribution, on the technical side, I think trying to really gather a very high senior team, well-experienced team, I think that's...
Absolutely. So before we wrap up, slightly off topic, on the afternoon, Colette Balou from Balou PR and I are hosting a workshop on if you're a startup and you want to get press, then what do you need to do? 3:30 in the small room, so if you're interested in learning more, then please attend.
Or watching a fight.
Or watching a fight between us,
Nice.
then please come along. Lunchtime. Thanks a lot, guys.
Thank you.